Shake it off, ladies and gentlemen. You know the famous Taylor Swift song, Shake It Off. Will it actually extend to real estate investment trusts? Will real estate investment trusts be able to finally shake it off the last 3 months of lackadaisical, downward, unprofitable movements? Exactly. We are back in our Melbourne home. Yes, ladies and gentlemen, if we need to shake it off, go to a cool environment. Like right now, back in my Melbourne home, the morning temperature is 15 degrees or below. I know it's sweltering hot in Singapore at 35 degrees. So maybe you need a change of environment to shake it off. But back to today's video, we are going to talk about whether real estate investment trust is finally able to shake it off the last 3 months of lackadaisical performance. Well, essentially in our last week's class for GCP Global investors that include high net worth individuals, family offices and index fund managers of real estate investment trusts held back in Singapore, we have shared quite a few things. One is that look at the chart, ladies and gentlemen. Now this was a chart that we presented in our last lecture 3 months ago, and in our last video that we have actually shown to you and shared with you on the cup and the holding pattern. Now you notice that in that video we have actually indicated to you that the S-Reits markets form a bottom similar to a cup pattern, in October of last year. But the key thing, ladies and gentlemen, it needs to break the holding pattern that you saw in the second last 2 weeks of 2023, where the S-Reits markets went to hit a high on 29th of December. Where we told you then to actually take your profits if you think the holding pattern essentially cannot hold. And true enough, ladies and gentlemen, see what happened? That gray handle essentially enumerated by the STI FT index at 650 was not able to hold, and eventually it came down. In fact, it came down not only in January, February, as well as in March. And as we enter into April, and praise the Lord, last Saturday, we have actually shared that we are turning optimistic on the REIT market after telling you to build up in December last year. That's because if you look at this chart, the downward trend for the FT STI has continued, but it is actually at a narrow range. As you can see, between the blue narrow range trading downwards is actually narrower. But then in our classes we have shared how we were able to trade profitability in some of our favorite REITs, including Capitaland, ICT, Capitaland, Ascendas Reit, and Frasers Centrepoint Trust. But fret not, ladies and gentlemen, if you had not sold at the high point in December last year, where are we now? Well, in fact, we are closer to the bottom, as you can see from the blue circle, as you saw in the last bottom in October of last year, than towards the top. So this means that essentially we're holding on to say REITs that are not performing, like Mapletree, PAC, or Parkway Life Reit. These are fairly good REITs, but they are selling at disappointing prices. But this cannot be said of, for example, the really terrible REITs like your Keppel Reit, your Manulife, your Lipo Malls, your Elite Commercial REIT. Stay far. Goes like this. You see, I stay out too late, got nothing in my brain. That's what people say. That's what people say. So, ladies and gentlemen, you've been too late to be selling off your REITs at the top, well, the recent top, in December of last year. Fret not, we are closer to the bottom now. So, let's wait for another opportunity. And ladies and gentlemen, that opportunity is likely to come now, because as you can see, one of the reasons why we have turned negative on real estate investment trusts 2 years ago was the fact that the inverse yield relationship, which as you can see is the difference between the 2-year bond yield in the US minus the 10-year bond yield. Now, in a normal bond market environment, you would expect the long-dated maturities like your 10-year bond yield should be higher than your 2-year bond yield, correct? Yes, but in this case, it's the reverse. And it has been in the reverse in the last 2 years. But right now, ladies and gentlemen, looking at the incremental returns, you can see that the difference now in terms of the negativity of the 2-year minus 10-year bond, has actually ranged from the circle of the high of 100 basis points to right now, something like 20 to 50 basis points. So we are nearer the end of the inverse yield curve rather than the beginning. So right now, as you say, if you're too late, that's what people say. We have actually mentioned to the fund managers as well that actually, in the 21-year history of Singapore REIT market, this correction into its 24th month now, yes, the Federal Reserve started to increase interest rates on 17th of this March in 2022, exactly 2 years from 29th of March as we speak today. You notice that essentially the REIT market has collapsed 27%. This is the sharpest correction in terms of magnitude. But of course, this is actually weighted off by crisis period that we saw during the global financial crisis, where rates actually fell 74%. But even that, the downtrend was only for 20 months. Right now we're at 24 months. So essentially it's already longer than that. So as I say, it is nearer the bottom than the beginning of a downtrend. Well, join me for this shake it off exercise, where you can basically kick all the blues away in REITs and make sure that you punch in the right direction, punch timely, and you have the stamina to last, because each attack is as good as each defense. Now, this is my Business Times interview in February, where I mentioned that the markets got it wrong in terms of data center REITs. So it's not surprisingly that Keppel DC Reit was smashed down from $2.30 the last time when we told our investors to actually take profit, down to below $1.70. Yes, that's a 60 cents whack, ladies and gentlemen. That's because, ladies and gentlemen, that a lot of analysts were actually taken off, that data centers would benefit from artificial intelligence. Well, ladies and gentlemen, for a further understanding of the best impact of AI on the respective industry, do look at Jensen Huang, the CEO of NVIDIA, in a presentation just 2 weeks ago at the CHG technology interview, where he spent 2 hours talking about Harper chips, talking about essentially the new Blackstone chips. That is very different in terms of processing capacity. It talks about the H100 chip versus the B100 chip, and how that would benefit. And on that basis, even before that, in my Business Times interview, I've mentioned categorically that if you're not a hyperscaler, and ladies and gentlemen, none of the data center REITs in Singapore are hyperscalers, you will not be able to benefit tremendously from the AI. So if that's the case, tell me, how do AI translate into the bottom line of data center REITs before you can conclude that data center REITs will benefit from generative AI? Again, ladies and gentlemen, one of the key things that the media and the analysts got it wrong. And true enough, at GCP Global, we are able to spot it. We have avoided data center REITs But then again, look at, nonetheless, pricing. Look at how Keppel DC has been smashed down to below 70. It's forming a double bottom, and in our class, ladies and gentlemen, we have told our participants that essentially, despite the flaws on Keppel DC Reit, particularly with respect to its two tenants in China, it's reached a price where it's becoming quite enticing. So while we stay away from the dark REITs, these are the first category of REITs that we want to be looking into. The recovery REITs, the ones that have been smashed out because of poor fundamentals being underestimated by the market, because of poor market sentiment, because we are buying the fundamentals. So which is the last category of REITs that we are looking at? Well, these are epitomized by the likes of Capitaland, Ascendas Reit, which, as you can see from the chart, is a ninth time that they have tested and went below $2.70. And every time it went below $2.70, as you can see, in the previous 8 times, ladies and gentlemen, we have told our participants to accumulate and trade it. When it actually went up to 280, 290, we took profits. And this time around, just 2 weeks ago, no different. It went to as low as 266 on Friday the last. And look at what it is trading now. It's gone up to 275, 276. Well, you'll be bagging essentially whether it's able to actually finally cruise through this descending triangle, which has been in vogue for the last 2 years. That's what we shared about in our class. So hopefully you enjoyed this week's video. Give us a thumbs up, subscribe, and thank you, ladies and gentlemen, for your kind and continuous support. It means a lot to us because essentially we are then able to bring to you weekly videos of great value to help you make a better decision for your investor. So remember, as what Taylor Swift says, I have too many REITs in my portfolio. That's what people say. That's what people say. So what we try to do, ladies and gentlemen, is to shake it off the bad REITs in your portfolio and help you to concentrate on the right and correct amount of REITs in your portfolio so that you'll be profitable as what we have been doing for the last 2+ decades. Just see you in the next week's video.